Yeah, guys. So one of the things with SPACs is, finding out about them before they hit the market, to do your own research. And then sometimes you have the opportunity to get into some of those names before they make those large movements, higher. So the first thing with SPACs is they start trading as units. So before they trade as units, they issue a filing with the SEC. So you can find the SEC website, which has all the S1s. So the S1s are the filings for these SPACs before they go public. Mitch has got the website right there for you guys. So there's a couple things to look for. So the S1s, if you go to that website, it will include, IPOs and SPACs. You have to be careful. You have to kind of look through the names, but usually it's easy to tell which ones are SPACs based on, having acquisition or acquisition corp in the title. So, you want to look for those. And then you also want to look. So some will say S1 and then some will say S1/A. So the ones that have the S1 are the first filing by the company. The ones that have the S1/A are amended filings. So usually that's ones that have already, issued their S1 and they update either the pricing or the number of shares offered or the date when they get closer to, those units going public. Then you want to pull up one of those S1s. So for the example today, I'm using one that we talked about recently. So this is Spinning Eagle. Spinning Eagle is the one done by the same team that just did those mergers with DraftKings and Skills. So experienced team, with 2 completed deals, both trading higher. So when I look through that filing, so the first thing I look at is the terms of the deal. If you look at Spinning Eagle acquisition, the terms of the deal, they're trying to raise $1.5 billion. They're going to trade 150,000 units. So nearly all SPACs offer units at $10 a share. PSTH, the Bill Ackman SPAC, is one of the exceptions where they offered at a $20 base price. So when you look at the units, you also want to see what warrants are offered. We haven't talked a ton about warrants on the show. That's something we really want to hit hard in 2021. It's a good opportunity for people, especially those familiar with options trading. As a warrant, is similar to an option. Typically the warrant is for $11.50. So when you buy units, most common that you get in that unit, it'll be a common share and then it'll be a portion of a warrant. So in the case of Spinning Eagle, the units come with 1/5 of a warrant to purchase a share at $11.50. With 1/5 of a unit, it makes sense then to acquire units, in increments of 5, because then you can get those whole warrants and no partials are given out. So if you bought 100 units of Spinning Eagle at $10 each, you would get 100 units that could be converted to 100 common shares and 20 warrants. So when we had Julian Klimachko on the show, he talked about using the warrants kind of as a arbitrage opportunity to where, when those common shares spike, you can sell the common shares and keep the warrants and then, use those for future opportunity for growth or vice versa. So there's opportunities here to get into some of these units, before they start trading, and we'll dive more into warrants down the road. Some of the newer SPACs, have stopped offering warrants. And then as you see with this, so Spinning Eagle, it's 1/5 of a warrant. Their prior 2 deals included 1/3 of a warrant. So you're actually getting less of a warrant. But again, you're paying a little bit of a premium because of the management team and the experience here. So the second thing I like to look at in the filing is the management team. So I think that's one of the most important things to look at. So as we get into Spinning Eagle, it says word for word, the members of our management team, including Harry E. Sloan, our CEO and chairman, and Eli Baker, our president and chief financial officer, have extensive experience with special purpose acquisition companies and business combinations. So, if you see that right away, hey, they've done a SPAC deal before or they have a current SPAC out. Then right in the filing, they actually disclose which SPACs they've been involved in. So in this Spinning Eagle filing, you get, the information about, those 2 recent deals and some other ones that they've also done, that aren't, as well known as they were before the SPAC craze kind of started. So it lays out that, Flying Eagle raised $690 million with units that included 1/3 of a warrant. That became Skills. Purchase price was $3.5 billion. And then Diamond Eagle raised $400 million. Units included 1/3 of a warrant and became DraftKings, valued at $2.7 billion. So Skills now trades, over $20 a share based on the Kathy Wood edition, and then DraftKings $44.86. So both of these, if you would have bought, back as units, you would have had those units at $10, plus you would have gotten 1/3 of a warrant. So you would have had some pretty high upside, with both of these deals, as you would have gotten those warrants to also purchase shares at $11.50. And those, you can either redeem those warrants or you can, sell them as they go up. So we see a lot of warrants trading around, the $1 to $2 range. But then when those deals are announced, you can see common shares, spike 10 to 20%, and you can see warrants spike hundreds of percent in that first day, as that deal is announced. So again, we want to hit hard on warrants this year. The fourth thing I like to look for in the filing is the target sector. So in the Spinning Eagle filing, it says, that they're not going to be limited to a particular industry, sector, or geographic region. So they're going to look at any company, any sector, anywhere, but they also want to use the management team's established global relationships and operating experience. So using this one as an example, it looks like, maybe they don't want to necessarily target sports betting or gaming because then they have a competitor, but they're willing to do that based on the management team. That's Spinning Eagle. I want to throw out another example, just since this one had a completed deal, would be if you were to go to the S1 for Ajax. So Ajax, symbol AJAX, is another one that we've talked about with a great management team. So in their filing, they wouldn't have had any history of SPAC deals. Ajax, they have to cover their management team a lot because ultimately that's what people are buying into when they buy the unit. So with Ajax, we have the founders of 23andMe, Instagram, Square, and Chipotle. So it'll lay out, how long those people spent with the company, how many acquisitions they did, what kind of growth they had with those. And then also it'll talk about, outside of the people with public company experience, some of these groups taking SPACs public, it might talk about, which companies they were invested in early on. So, some of these filings we see, Coinbase, Robinhood, mentioned as early investment, and it'll talk about the management experience, which I think is real important. So again, you want to look for ones that have completed SPAC deals, but you also want to look for ones that have strong management teams that maybe have never done a SPAC before. So like an Ajax. So those are the four big things that I look for when I comb through these S1 filings. So again, four things were the terms of the deal, the management team, if they have a history with SPACs, and then the target sector. So, within that target sector, you want to see, so if someone has experience with, Coinbase, SoFi, are they targeting fintech or are they doing something completely different? You want to see them have experience, within that sector because they have those great customer and company relationships, of growth in the sector that, can hopefully translate to a strong SPAC deal, being announced. Now, we do see exceptions. We did have like a cannabis SPAC, that was targeting cannabis market. They put that in their filing and then they ended up acquiring a LiDAR company. So again, outside of their sector, but that high growth, taking a company like Canopy, into growth. And now they're hoping to do that with a LiDAR company. So, and there's that Ajax filing there. So again, you can find these filings yourself. We try to cover, as many as we can. Right now we're seeing 40 to 50 issued every week. I usually try to go through and find a couple good ones to talk about. And as he's scrolling there, you can see, so like RMG Acquisition Corp right there has Roman numeral 3 next to it. That's their third SPAC. So this is the team that did Romeo Power, now RMO. And then we've talked, about, so there's Spinning Eagle. We've talked Northern Genesis Acquisition Corp 2 right there. So that's NGA becoming Lion Electric. They're launching a second SPAC. So again, if you like the terms of the NGA deal, you like the Lion Electric story, maybe you want to invest in their second SPAC and maybe you want to get, invested into the units when they trade between 10 and 11. Now, I will say, units used to, go public around $10, as that is, the offering price. But due to the strong demand for SPACs, now we're seeing units trade at a premium right away as, funds try to get, early stakes in these units. So you may not be able to get them for 10, but again, you're buying a unit, which includes a common share and a portion of a warrant. So you still may be getting something below the net asset value, so that's something to definitely pay attention to.